Good afternoon, everybody, and welcome to this week's weekly analysis session for the US of A, Monday, the 21st of March 2016. Let's kick things off by going through the disclaimer. The content of today's presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, your financial situation, nor particular needs. So, as always, before making an investing decision, based on the general advice presented in any of our presentations, please consider whether the advice is appropriate in light of your financial circumstances or seek further advice on its appropriateness. All right. Again, we'll go through and have a look and see what the market risk is at the moment, what's been happening in the US in particular, identifying a number of setups this week. There are a couple trades that are still pending from the previous week. We do have a couple of cancellations as well, but as I said, a couple of new setups that presented themselves over the course of the weekend. Any Q&A that you might have, also very much welcome. The market risk in the US, and exactly the same as it is here in Australia at the moment, we are in moderate market risk conditions. Good afternoon, Kay. Moderate market risk conditions, so that basically means that you're effectively allowed to have up to 80% of your capital exposed to the market, and obviously from a percentage value at risk element, 80% of your maximum allowable drawdown, which for most people is around about 15%. So what that means is if we use our market risk multiplier of 80% of our 15% means that we can have 12% value at risk in the market. Now, what you're going to find, particularly just with straight out share purchases, is that it's quite difficult to get up beyond that sort of 12 to 15% value at risk, because what tends to happen is you tend to run out of money before you get to that level of exposure in the market in terms of or strictly looking at your value at risk. So another way of looking at this particular model is to say, well, look, if I had $100,000 of capital that I was investing, then at this particular point in time, it would make sense to have up to around $80,000 invested in the market. Should market risk continue to improve, then, and we head into a low market risk, then it's fair and reasonable to have all your capital allocated. And conversely, as market risk deteriorates, as we head on further down into high, very high and extreme, that even at extreme levels, 10% there, if you had $100,000 in a portfolio, and again, if the market conditions do change, then you really just want to be sticking to your trade management rules. So don't just jump out of the boat just because it's getting a bit rocky. Continue to stay the course, steer the ship in the right direction. And if your stocks have got good relative strength, then there's a fair chance that they're going to hold up and weather a fair amount of the storm. And if the seas do subside again, you'll be pleased that you didn't jump out, because those stocks will start to pick up quite quickly. Conversely, if you do happen to get stopped out, then that's just the market's way of telling you, look, at this particular occasion, you might be wrong on these particular trades. Better to be knocked out, preserving that capital for when the conditions do improve. Hopefully that makes sense. If not, certainly just give us a call and we'll talk through that at length for you. Last week's Friday session, the macroeconomics session, Jeff spent a little bit of time going through what he was taking from the FOMC statement of last Wednesday. So how was that likely to impact the markets, and what are some market sectors, etc., that might benefit from a delay in interest rate rises in the US? Just a quick notification as well. This Friday's afternoon session and the following Monday session will be cancelled just because of the Easter break. But once I return from that Easter break on the Tuesday, I will do a recording just so that we're all up to date for both markets as well. All right, so let's go through and head across to our Beyond charts, and as always, have a look at our market risk indicators. Interesting, a few weeks ago, I guess just sort of summarising a little bit, we were talking about how we'd had these two sort of very much equivalent sorts of lows. And one of the members made the comment at the time that we had a little bit of divergence. That is, we had equal lows on our index, and yet our stochastic, our market risk indicator, had actually had higher lows, if you like, or higher troughs. And so this divergence between the indicator on what was actually happening with price on the chart. Since that particular point in time, the market has really ripped up very, very strongly in the US, and it's now comfortably closing above our sort of longer term moving average. So that's obviously good for the US markets. It's certainly risen very, very strongly, and last time we had this sort of area where we had two points of demand that managed to hold up the market in the previous time, and it rallied very, very strongly. We then started to move sort of sideways again before weakening off. The market is certainly, at this point in time, there's been a lot of buying, a lot of demand in this particular market. So it'll be really interesting over the course of the next couple of months to see what direction we can take from here, whether or not we're going to continue to move higher or whether we're going to have a bit of a pause. More than likely, I think we're probably due to go a bit sideways for a period of time. We have moved extremely quickly in a directional sense, and I think the market is due for a bit of a pause, or maybe even a little bit of a pullback given the recent strength. So we'll just keep a bit of an eye on that. And the important thing at the end of the day is just to be making sure that you're aware of what the current market risk is at any point in time, and obviously continue to manage your trades in the appropriate way. All right, so what I'd like to do first is just go through and have a look at some of the new pendings for this particular week and any amendments to previous pending trades as well. This is a stock, CVC, that we had a look at a couple of weeks ago. This is actually going to come out of the watch list, and the reason being that just this last week it failed to trigger, and subsequent to that we've actually now in short-term downtrend, and wherever this next little trough forms, that the trough that does form, is it going to be at or above the second from last, what will then be the second from last medium-term peak? And no, it won't. Well, quite clearly, wherever the trough forms now, it's below the second from last medium-term peak, so it doesn't meet our price action filter, so that's going to come out of the watch list. There was one other cancellation in the watch list, and that was RMD. So we'll have a look at that, and for exactly the same reason as well. Again, there was sufficient room for this particular setup to hit its 2-to-1 target just, but as you'll see, that last candle there, a lower high and a lower low. We're now in short-term downtrend. No matter where this turns around and starts to move up, that is, if it does move up to form a new trough, that trough is therefore going to be well below what will be the second from last medium-term peak. There's the last medium-term peak, that will be the second from last medium-term peak. So the new trough is going to be well below that, and therefore again invalidates the price action and will be cancelled. All right, so let's go through and have a look at the new setups for this particular week. A couple of nice looking charts actually. CHD, there we go. CHD, Church Dwight. And what I've actually got in here is a couple of analyses that I've looked at previously, but this is the one that we're really looking at. And you'll see last week, quite a nice candle there. Not quite a pin bar, but getting towards it. And now back into short-term uptrend. At the same time, forming a new medium-term trough. And where is that trough in relation to the second from last medium-term peak? There's 1, 2. It's clearly above it, so the price action filter, it ticks all the rules there. And if we zoom out, you'll see that we're at all-time highs, which is great because it means that there are no overhead obstacles. The question is, how much further can this continue to move in an upwards direction? Well, you can see from its long history that over the last 4 or 5 years, it's continued to be on many, many occasions at all-time highs. So it's those sorts of stocks that continue to carry the indices higher and higher along the way. So all we need to do for this particular one, and I'll just move that annotation down so we can see, is wait for a break just past our last medium-term peak. So that means we've got to have a non-stop order at $93.18. We also need to put in a protective stop at least 2 ATRs below our entry level and at least 0.5% below that last medium-term trough. Well, 2 ATRs as a minimum puts us way down here at 86.79, gives us lots of room and lots of upside potential as well. So that's CHD. Next one on the list, CONE. Cone, which is Cyrus 1. So this is a stock that hasn't been around for a huge amount of time. You can see there way back in 2013 was when this one first listed, but since that point in time it's continued to move up quite strongly, particularly over the last 8 or 9 months in particular, and you can see the relative strength certainly coming through in spades there. Moving averages all separating, angling up, showing good strength in the overall trend. This last candle here, it has moved a little bit beyond the last medium-term peak, but the price action is very good. The last trough well clear of the second from last medium-term peak. We are at all-time highs. The only thing we really need to do is, if we want to get into this particular stock, is to place an on-stop order 0.5% above the high of our last candle there. So we'll have an on-stop order at $42.33, and our protective stop loss again outside of 2 ATRs and coming in at $37.77. That's Cone. Again, you know, quite a lot of white candles in through here as well, breaking out above this sort of zone of congestion, if you like, coming back, retesting, and really nice strong candle last week. Next cab off the rank is GGAL. Grupo Financiero Galicia. I'm not too sure whether that's Spanish. It sounds a little bit Spanish, but nevertheless. In terms of price action, it's just formed a new medium-term trough, and it's formed that on the basis that we've now got a higher high and a higher low on this last candle, so we're back into short-term uptrend. Where's that trough in relation to second from last medium-term peak? It's well clear of it. We just need to zoom out and see whereabouts we are in the scheme of things. And quite clearly you can see that we are, again, at all-time highs. So, to structure ourselves a trade around this particular stock, we just need to wait for the break of that last medium-term peak. And to do that, we just need to place an order 0.5% above that previous high. So we have a non-stop order coming in at $31.07 and a stop loss there at $26.33. Still got a little bit of work to do before it gets up to that medium-term peak, but again, relative strength, ticking all the boxes, as is our price action. So that was GGAL. KEP, which was Korean Electric Power. Again, really nice set of candles right through here. Great big white candles, really strong price action as well. Oops, I'll just move that across a little bit so we can see it. Last trough that's now just formed by virtue of a newly established short-term uptrend. Trough well clear of the second from last medium-term peak. Where are we in the broad scheme of things? Well, at this particular point in time, we do have way back in 2007 there. We just go back there and have a little bit of a look. We do have a long-term peak there at 25.61. So I'm just going to go through there because I don't think I had a good look at that before. In fact, that's that previous line. Let's go through and have a look at that because I suspect that that's 2007. That is really kind of prehistoric, actually, as far as long-term peaks. Remember the GFC. The top of the market was around about November of 2007. So that's, as far as I'm concerned, that's pretty much history. We are coming up to that level at this particular point in time, but given the fact that this stock has had this broad sideways moving pattern, I forgot to put the rectangle on rather than the horizontal line there, this broad-based sort of pattern here where it's really moved pretty consistently between ceiling and floor along the way. The whole clue that this stock was about to start moving, as we look at it here, you'll see that price comes up to the ceiling a number of times, and each time it does, you'll notice that the troughs, the floor that is, it doesn't quite make its way back down to the floor on each occasion. So it's showing us that we've got rising points of demand along the way, And really all we have to do is wait until it breaks out of the box. Now, it did break out of the box a few weeks ago, and it's come back and had that really nice positive test of that particular level, and it's now starting to break out beyond those pretty much those all-time highs, really, way back in 2007. So that's KEP. The structure of that particular trade, I'll just move our little box out of the way there and get rid of our horizontal line there. On stop order at 25.61 and protective stop coming in at 22.73. That's that's KEP. And the last one is O, Realty Income. So I'll just go through and have a look at that particular setup as well. Let's zoom out. Again, all-time highs, looking really strong. What I do like about this particular setup again is this type of movement where you've seen for a period of time, and you can extend that box just for your reference points to see that we've clearly got zones of demand at these particular levels, and we've got zones of supply as well. So what was the clue for us that this was about to start moving outside of what's effectively been about pretty much a 3-year sideways movement is the fact that we're starting to get a series of higher troughs along the way. And clearly, once breaking out of our box, if you like, we've had a movement back down towards the upper edge of that particular box. Now I'll just move that down because as I've changed the scaling of it, it moved the box as well. It's broken out, but what it's also done at exactly the same time is it's come back and retested these previous zones of supply, which are now starting to act as zones of demand. That's a very positive sign for this particular stock, and lots of nice white candles as well. So we just need to wait for a break of the last candle in this case, because that last candle has just marginally already surpassed the last medium-term peak. So from that point of view, we just need to place an on-stop 0.5% above the high of that last candle. The high there coming in at 61.85. So adding 0.5% to that, we get $62.16. So again, making sure that the stock's got to do the work before triggering into the trade. Stop loss coming in at this case at $57.19. Again, that's outside of 2 ATRs and at least 0.5% below that last medium-term trough. So just wondering if any of you managed to find any other setups from the US for the last week. Interesting that when I ran the scan, certainly there were a lot more outputs of from the scan last week. So that's, again, a positive sign. It's just a little bit of feedback that's coming back to each and every one of you that, you know, the conditions in a growing number of stocks are changing to the better, and hopefully that continues. What do you think of NNN? I think NNN, I think that's already in the watch list, actually. NNN, let me have a look. Yeah, it is. It's in the watch list. It was in the watch list from last week there, Paul. So certainly well picked up from that. On stop 46.37. Yep, absolutely. So you've nailed it. Well done on that. Congratulations. Good job. And that looks a good setup as well. Again, these previous. It's interesting that these previous points of supply are continuing to act as points of supply until once they're broken, and they've been broken, coming back now, starting to act as points of demand. So yeah, absolutely, well done on picking that up. And obviously the scan picks it up as well because the relative strength is outperforming on all 3 time frames. So well done on that one. And the other one you had there, Paul, was SL. I'm not too sure that I've seen SL. I'll go and have a look. SL. So it's just SL. Let's have a look. Oh, SL was a stop loss. There you go. Fantastic. All right. Sorry about that, Paul. Yes, the SL, not the stock, is the stop loss. Okay, so you got a stop loss at 42.35. I've got a stop loss there at 42.77. So what we'll do is we'll put on the value line, and obviously from 46.37, what we want to do is we want to go across to the end over here and read out what the ATR is. So the ATR there is $3.33. So let's go through and we'll open up the calculator there, and 46.37. And from that, we've got to take away $3.33, and we get 43.04. Now, 43.04, is that 0.5%? Well, first of all, is that below our medium-term trough? Now, the low there, quite difficult to see, is 42.99. So if I bring back my calculator, clearly 43.04 is above that level. So what I need to do is I need to take that low, which is 42.99, so 42.99, and I need to be 0.5% below that level. So if I multiply that by 0.995, that's 0.5% from being a full 1 unit, if you like, or 0.5% away from being 100%, and go equal, and I end up with 42.77. So at 42.77, that level, it's outside of the the 2 ATRs, because remember the 2 ATRs was above that last medium-term trough. We've looked at the low of that last medium-term trough. We've deducted 0.5% from that figure, and we get 42.77. So hopefully that makes sense there, Paul. But well done for clarifying that as well. And sorry, I couldn't find the stock SL. Had me looking. So that was it for new setups. We've gone through a couple of cancellations there. What we will do now is we'll go through and have a look at the existing watch list. There was one stop out last week, AWR. So we'll just go and have a look at that one. And you'll see that price, that last candle is now closed below our last... sorry, not below our last medium-term trough. I was going to say below our last trailing stop increase. So once we triggered in, a nice strong price action through here, dragged the trailing 3 ATR up above our initial 2 ATR base stop. Now the price is closed below that, we now exit at market tonight on this particular stock. So whatever entry level that is. So that was on AWR. That had been in the portfolio for probably about 7 or 8 weeks, I think. In fact, a little bit more than that. I think that was the order through there. So a few months from the end of last year. Right, trailing stops, CUBE. Moved very nicely last week. Nice candle, and again, you'll see that little green line just trailing up and moving in the right direction. So that's moving very nicely along the way. FISV was another one that moved very, very strongly. Really nice candle, given the last half dozen candles there. So really nice strong close to the end of the week there, and dragging that 3 ATR up nicely along the way. KMB. It's only been in the watch list for a couple of months. KMB moving up nicely, showing some good solid price action as well. These higher troughs all the way through, showing lots of nice strength. A lot of white candles in there as well, and that one having its stop trailed higher. PGR, all the updated trailing stops are in the watch list as well. Beautiful candle last week, dragging that 3 ATR onwards and upwards. PSA, Public Storage as well, really nice candle. Again, after triggering, moving sideways, broad sort of market weakness, the sell-offs, etc. that occurred, managed to hold up very well, even though during the course of one of those weeks, it was at some stage during the week lower than the trailing 3 ATR. But again, it's where did it close for the week? Closed above it, and it's moved up really strongly since then. So again, just following the rules and keeping it really simple certainly is going to help you stay in your trades and give you the only reasons in which you need to exit. TWC, look how long this stock's been in the portfolio. So from July of last year, it has just gone sideways. Interesting that it went sideways, popped up, went sideways. It's starting to pop up. I'll be really interested to see whether this gets continued follow through or whether it starts to go sideways again. That's TWC. HC. There it is there, Smith and Wesson. Again, we had a fairly wide stop on this one in percentage terms, but last few weeks has been really, really strong on that particular stock and dragging that ATR line up higher as well. That certainly had a wide stop, and you can see the little green line, our trailing 3 ATR, was actually inside our initial protective stop. Our initial protective stop, really, the reason it was down here wasn't because it was 2 ATRs. It had to be 0.5% below that last trough, and that distance from our entry point was a lot further than 2 ATRs, but we also had to be at least 0.5% below that last medium-term trough. So hopefully that makes sense. And SYY, Cisco. Again, after triggering in the previous week, nice candle last week, and you'll see they're just dragging that trailing 3 ATR up above its initial 2 ATR based protective stop. So moving along very nicely at the same time. All right, folks, any questions, any observations, any comments you'd like to make? Just a reminder, there won't be a Friday afternoon analysis session because of Good Friday or the following Monday, but I will do a recording and put that out on the following Tuesday. So keep an eye out for that. All right. Well, if no further questions or anything at this particular stage, we'll put a halt to it there. As always, if you've got any questions or you think of anything a little bit later on, feel free to request a coaching call or pick up the phone and give us a call. All right, folks, we'll talk to you a little bit later into next week. Bye for now.